So we talked about the US stock market, and we've certainly seen more and more investors wanting to get exposure to the stock market. I mean, why wouldn't you want exposure to the US stock market? It's apparently the cleanest dirty shirt. The economy's doing well. The market's gone up 255% over the last 5 years or 7 years or whatever it is. Why wouldn't you want to do that? And that leads me on to mistake number 4, chasing performance, or what is also known as fighting the last war. That is, investing like you wish you would have with the information that you have now. But unfortunately, that is a losing strategy, yet it is an absolute tradition in financial markets. We see it all the time. And what this chart shows is, for 10 years ending 2013, a number of different strategies and investments. What the red bar shows is the buy and hold investor who held their position through that particular investment for that time. And the yellow or the orange line shows the performance chaser, that is someone investing in last year's winners. And as you can see, each and every time you're getting subpar performance. And that's because the return from yesterday, or the 250%, 255% that we got 5 years ago, that's yesterday's news. That's not tomorrow's news. And the financial media feed on this. So you've seen the paper, you'll see the 10 hottest stocks or the 10 hottest investments to be investing in. Unfortunately, the gain's already been made. Those headlines should in fact read the 10 hottest investments you should have been invested in. But unfortunately, that just doesn't happen. In fact, there's an acronym for this, and you've probably heard it, FOMO, fear of missing out. And that's just human tendency, that we think something's just going to keep going up in price, when in fact the converse is probably true. Chasing performance. One of the easiest and most comfortable decisions an investor would make, but probably one of the worst decisions an investor could make. Investors need to understand, the more you pay for something, the less your future expected return. The less you pay for something, the greater your expected future return. Yet investors ignore this fact. Please stop making investment decisions by looking through the rearview mirror. Start looking ahead, and all disclaimers aside, you'll have a much better investment experience and make much better investment decisions.